What is the bet on sterling right now?
I think the market has shifted to a place where they're trying to price in the upside in the pound from an extension to the negotiations, a reasonably midway positive scenario. The main problem that the pound has, and it has always had it throughout the last few months, is that if things go well, there's some upside, by moderate upside. Maybe we go to 85 against the euro from 88 or slightly lower than that. But if things turn sour and you have some kind of hard Brexit, our estimates from our analysis that the cumulative loss to GDP over a 5-year horizon compared to where the UK could have been is about 10 percentage points of GDP. And the main valve to offset those pressures would be the currency. So there's downside in the currency that is bigger than the upside in a bad scenario, which is still a lower probability.
Well, you absolutely nailed the idea of valve. I mean, it sounds like Newtonian mechanics, but is Britain working under the same or normal model of economics linked into markets, or is it just so different because of Brexit?
Obviously, Brexit is a fundamental event, as you sort of like alluded to. Obviously, there are some situations that could be highly disruptive for markets in a disorderly Brexit situation. Again, those are very low probability scenarios, and they imply very little communication between the authorities, in particular the financial authorities. I think that if things become disorderly in an orderly fashion, if you allow me that, in a reasonable worst-case scenario, the market mechanics start to work, and those link to the current account deficit of the UK, which under a slow growth scenario in Brexit comes under pressure, weakens the currency. You know the adjustment math.
Where do you see a lot of the UK stocks? I know in the past he said, well, you still invest in them because they're so international.
Exactly.
But actually it seems that it's still so uncertain what kind of shape Brexit takes.
Absolutely, but and in a way, the bizarre thing is, given the inverse correlation, at least in the short term, between sterling and the FTSE 100, because of the international exposure of FTSE, you might argue that if the pound falls because of a disorderly Brexit, the UK FTSE 100 is a good place to be, bizarrely enough, because you will provide the offset to the currency. Yes, the currency falls, but of course their pound earnings rise because they're redenominated in a much better way, currency adjusted. So actually, it's pretty good for the FTSE. And even in a soft Brexit scenario, I don't think it's that bad. But the difference being that you'd want to buy the UK mid-caps to buy exposure to the domestic economy in that scenario.